Well, hello, traders and investors. I'm LA Little, and this is your weekly NeoTA broadcast. We take a look at these markets, doing it from a neoclassical perspective. That means each time we ask ourselves what happened last week, what might it tell us about the coming ones? We do a show every Sunday evening broadcast right before 10 o'clock Eastern Time. It's archived on YouTube. It's under the channel LA Little. If you haven't subscribed and you want to, just reach up in the right-hand corner and do so. Anytime I push content, you'll get a notification. As far as what happened last week, it was another up week in the NASDAQ and the Russell, slightly down in the Dow and the S&P. They were pretty flat. On Friday here, you can see the numbers. You actually had a nice little push up again in the NASDAQ NDX. They were the ones pushing in the Russell. Everything else kind of taking a back seat, just kind of hanging in there. But for the most part, this market has stretched and stretched and stretched, but yet it hasn't given any kind of indication yet that it's ready to give it up. And until it does, there's no reason for you to be trying to short this thing. DAX up, CAC's up, right? Europe moves higher. Nikkei moves higher, even with the Bank of Japan not accommodating like people thought they would. Big spike up in gold and silver. In all, in here in commodity lands as well, even in the bonds, right? All in all, it was pretty much all asset classes up, which is typically not what you see, but anymore has been what you've seen since the Brexit news some time back. And why is that? Well, it's because everybody believes these central banks are going to come in and flood these markets again. And in the past, that has led to higher markets, and that is the belief. Let's take a look at the charts here. Let's pull up the S&P 500 and see what we got. We start with the S&P 500 because that's the broadest market out there. Gives us the best broad indication of what's happening and what's been happening here for about 2 weeks. It's just a sideways tight consolidation. Matter of fact, one of the tightest consolidations you'll see for that period of time in this particular index. And so we have a nice big push up, right? Then we get the consolidation, and we're waiting, a little push up, consolidation, small one, and now the push up consolidation. Waiting for the target, which is up here, to be hit. All the targets on all the other indexes have already fired. This is the only one that hasn't quite done it yet. And so on that level, pretty positive. If you look at it here on a weekly time span, you've got the same sort of thing in that you've got overall the highs back here, right? You break over everything and you push right on up into the new high territory hanging up there. So 2 bars on the breakout now. That's a pretty good indication that more than likely whenever this thing does come back for the retest, it's going to hold. I think the key area on the way back is down in this level. I've told subscribers that, and I'm sharing that with you. And so this area here becomes kind of a key area on the way back when and if that does happen. If we look elsewhere and look at the NASDAQ, what we're going to find there is that it has now met its objective in terms of the ABCD structures on the upside. And so you had that A point here, the B point, and then a move on up, and it just finished it off. And so the NASDAQ, the NDX, the Russell, all have finished off their structures. Volume a little bit higher here as it continues to stretch higher. Had a huge week last week as a result of all the big cap technology. If you look at any of them, if you look at Apple, if you look at Amgen, not Amgen, but if you look at Apple, Amazon, Google, or Facebook, all 4 of them. And the prior one to that, the prior week, was Microsoft. All 5 biggest cap stocks in the index all pushed higher and have helped to drive these indexes higher. Finally, if we look at the small caps continue to push higher along with the mid caps and the large caps, and you can see that grind up right here. If I were doing an old classical TA type thing, right, I would probably be drawing these cup and handle kind of moves that are taking place, right, which are huge. And you even have smaller ones inside that, smaller cups. But any way you look at it, this stuff is positive, whether you want to be classical or neoclassical. The neoclassical piece of it that's always so nice is it gives you a lot of measuring tools on any kind of retrace. For example, anything back into this swing point high should be bought immediately on the first pullback. And I don't even know if it's going to get there now, given how strong this has been. So any way I look at this, any way I want to look at this, I can't help but admire the strength in this index. You push over here, you continue to grind higher. Over and over, all of these look positive. Now, you do have ABCD structures bullish on the weeklies and the monthlies. They do suggest that this thing is going to continue to roll. We're also at risk of a pullback at any time. And so, if you are trying to, put a lot of money to work up here, just recognize that you may find yourself underwater on those trades if you take them at these levels. And what that means to me is not that you can't take them, that just means you better be looking at the intermediate term time frame if you in fact are going to take them. If we go over to the overseas markets and take a look at those, I'll start with the Australian market, which keeps pushing higher. It actually had a little pullback scenario set up with a test failure here on these two bars, but it didn't stop it. And you even got volume expansion on Friday. If you look at it on the weekly, nice grind up, coming after the top of this bar. You got the central bank in Australia going to do their thing, I believe, Tuesday. That's why I bring this one to your attention. I suspect this one's getting close to some sort of a pullback as well. But again, just like everywhere else, there's nothing in the cards yet to show that that is going to happen. If we switch our attention over to Europe and take a look at the CACs, what we see there is a nice little spike up in front of the Japanese, and as a result of the Fed central bank meetings last week, get a little pullback into it, a little hammer back up to the top side. This still looks to be going after that swing point high. Scooting over to the DAX, what we have there is the same sort of, consolidation up here on a spike up. This little break here breaks this swing point's high. This one still remains. We tested that high and failed. Made me think we were going to get some sort of a pullback, but what does it do? It turns around, goes and tests it again and fails again. 10.340 is that top, gets to 10.355, still closes up underneath it. This is going to be a big one to watch tomorrow in terms of Europe. Once they trade. I know Switzerland's closed tomorrow. I'm not sure about the rest of Europe. I believe it's all of them are closed tomorrow. So it'll be Tuesday before we see that. But that's a key area, right? Because if you get over this, right, then you can start pushing up here to go attack these other highs. And that's what he's trying to do. He's trying to get up there and attack those highs and get over them. If it does, you get a multiple swing point breakout, multiple time frames, which can lead to more returns. And that's Europe. Asia, so-so. I don't see anything big over there. In general, the way it looks to me is you have the same thing we've had for 2 or 3 weeks now, and that is we have a strong market. Strong markets don't tend to let you in. This one's not doing that. It's not letting you in at all. And that's the way they trade those things when they get them going. And right now, this one's going. If you get a pullback, you got to buy it. And if you don't, you just got to stay with what you got and try to find other places to wedge into. That's it for tonight. Have a great one. Thanks for joining me. Take care, and I'll see you next time. Good night.